What if, every single time the stock market crashed and the headlines screamed that the world was ending, you did one weird thing? You invested $1,000. Not at the top. Not when things felt safe. Right in the middle of the panic. 5 crashes since 1987. $5,000 total. Today, that money is worth about $59,600. Nearly 12 times your money, by buying the exact moments everyone else was selling. Let's look at the crashes, the math, and why almost nobody actually does this. This video isn't about predicting the next crash, and it's definitely not about timing the exact bottom. Nobody can do that, not even professionals. It's about a much simpler idea. Crashes are the only time in investing when great companies go on sale, and almost everyone is too scared to shop. The strategy here isn't genius. It's temperament. It's the ability to feel terrified and buy anyway. That single decision, repeated 5 times over almost 40 years, is the difference between average and extraordinary. Let's meet the 5 moments that tested it. We're using the S&P 500, the same 500 largest American companies from the last video, the standard benchmark for the stock market. Since 1987, it has crashed hard 5 separate times. Black Monday in 1987, the dot-com collapse in the early 2000s, the 2008 financial crisis, the COVID crash of 2020, and the 2022 bear market. Each time, the pattern was identical. Stocks fell. The news got apocalyptic. Ordinary investors sold in a panic, locking in their losses forever. And each time, the market eventually did what it has done after every crash in its history. It recovered, then went on to new highs. Our experiment is simple. At the bottom of each of those 5 crashes, Jimmy invests exactly $1,000 into the S&P 500 and never touches it again. Let's run the tape. Crash 1. October 1987, Black Monday. The market lost over 30% in weeks, still the worst single-day crash percentage in history. The bottom hit in December 1987. $1,000 invested there, held for roughly 38 years to today, is worth about $33,400. Crash 2. The dot-com bust. Tech stocks imploded from 2000 to 2002, wiping out fortunes built on companies that never made $1 of profit. The S&P 500 bottomed in October 2002. $1,000 invested at that bottom is worth about $9,700 today. Crash 3. 2008, the financial crisis. Lehman Brothers collapsed, banks failed, and the S&P 500 lost 57% of its value. The bottom came in March 2009, arguably the scariest moment to buy stocks in most people's lifetimes. $1,000 invested that week is worth around $11,100 today. Crash 4. COVID 2020. The fastest crash in market history. The S&P 500 fell 34% in just 33 days as the entire global economy shut down overnight. The bottom was March 23, 2020. $1,000 invested that exact day is worth about $3,350 today. Crash 5. The 2022 bear market. Inflation, rising interest rates, and recession fears dragged the market down 25%. It bottomed in October 2022. $1,000 invested there is worth around $2,100 today. Added up, 5 deposits of $1,000. $5,000 total, invested at 5 of the scariest moments in modern financial history. Today, that's worth roughly $59,600. If crash buying works this well, why doesn't everyone do it? Because in the moment, it feels insane. In December 1987, commentators were predicting a second Great Depression. In March 2009, banks were failing and some economists genuinely questioned if the financial system would survive. In March 2020, nobody knew if the world was entering a permanent shutdown. Buying stocks in those weeks didn't feel like a smart discount purchase. It felt like throwing money into a fire. Our brains are wired to run from danger, not walk toward it with a checkbook. The investors who bought during those 5 windows weren't calmer than everyone else. They were just willing to act scared and invest anyway. Let's be straight with each other, because this channel doesn't sell fantasies. First, these numbers are price return only. They don't include dividends. Add dividends reinvested over 38 years, especially on that 1987 investment, and the real total is meaningfully higher than $59,600. Second, nobody rings a bell at the exact bottom. Jimmy's $1,000 landed on the literal lowest closing day of each crash. Pure hindsight. In reality, you might buy a few weeks early or a few weeks late. The good news, it barely matters. Buying anywhere within a month of these 5 bottoms still would have produced a similar result, because the recoveries were so large that the exact entry day is a rounding error. Third, past crashes don't guarantee future recoveries, but every single crash in United States stock market history, without exception, has eventually been followed by a new high. So how do you actually put this into practice, instead of just admiring it after the fact? 3 moves. Move 1. Keep dry powder. You can't buy the crash if every dollar you own is already invested or already spent. Keep a small cash cushion, even a modest one, specifically earmarked for when the market drops 15, 20, 30%. This isn't your emergency fund. It's your opportunity fund. Move 2. Pre-decide the rule before the fear shows up. Write down, right now, in a calm moment. If the S&P 500 falls 20%, I invest this amount. Deciding during a crash is nearly impossible. Your amygdala is running the show. Deciding today, on a normal boring Tuesday, is easy. Let today you make the rule that scared future you will follow. Move 3. You don't need to nail the bottom. You just need to show up. As we just saw, buying anywhere near the bottom captured almost the entire recovery. Waiting for the perfect moment usually means waiting until after the rally has already started, because the perfect moment is only visible in hindsight. Buy when it's scary, even if it's not the scariest possible day. And here's the version of this that works even if you missed all 5. Keep this strategy loaded for the next one. There will be another crash. There always is. History says maybe once every 4 to 6 years on average. When it comes, and the headlines are terrifying, and everyone you know is selling, that's your signal, not your warning. Let's bring it home. $5,000, invested only during 5 of the scariest stock market crashes since 1987, Black Monday, the dot-com bust, 2008, COVID, and 2022, is worth roughly $59,600 today. Not because the strategy was complicated, because it required doing the one thing that's simple to understand and brutally hard to actually do: buying when everyone else is running. So here's my question for you. If the market dropped 25% tomorrow, would you buy? Or would you panic like everyone else? Be honest in the comments. I read every single one. If this changed how you'll react to the next crash, hit like, subscribe for a new What If Money breakdown every week, and send this to the one friend who sold everything in 2022. I'll see you in the next one.